King. And now we recognize the gentleman, Mr. Hiles, for 5 minutes.
Chairwoman Velasquez, Ranking Member Shabbat, and members of the committee, thank you for the invitation to testify at this hearing. My name is Michael Hiles, and I'm the CEO of 10xts, a Cincinnati-based fintech, regtech company building blockchain solutions for financial records. The SBA's admirable effort to rapidly mobilize financial stimulus through EIDL and PPP loans demonstrates how small business funding is clearly an essential lifeline to a thriving economy. When American small business is unable to access capital, single moms, immigrants, and regular ordinary people suffer. The SBA has historically partnered with banks as the origination and servicing agents for lending programs. While this approach has generally allowed the SBA to serve a wider market, the administration can only be as effective in delivering services and support as their partners. Therein lurks the problem faced by the SBA. The PPP program experienced significant delays in delivering financial relief to small businesses due to many banks' inability to adjust business operations in an agile fashion and fairly deliver funds in a diverse and inclusive way. We directly experience these frustrations. Legacy banks are already in the throes of compressive disruption. They are not in a position to quickly respond to rapid disruptive changes in the market. The resulting permanent branch closures and downsizing has been an alarm bell for many. In 2018, Gartner published a report indicating that by 2030, 80% of the traditional financial services firms will close, become commoditized, or exist formally but will not compete effectively in the market. With so many consolidations, banks have struggled to merge redundant legacy IT systems. The largest banks are a hodgepodge of too-big-to-fail technology strung together with little to no standardization. As a result, institutions are weighed down with inefficient, fragmented processes. Our hypothesis at 10xts is that a bevy of problems are mostly based on how information, records, documents, and data are stored, managed, shared within and between other organizations and customers. Trusted information is still mostly another human vouching for the authenticity of documents and data. Facing increasing regulatory scrutiny, banks have been reluctant to drive innovation due to the inherent compliance risks. The financial services industry already spends more than $270 billion per year in compliance and regulatory obligations. Legacy systems limit the simple automation and straight-through processing from front end to the back office. Proprietary systems complicate the adoption and integration of emerging tech like blockchain, AI, robotic processing, and API-based microservices. In short, legacy information systems reduce a bank's ability to innovate and improve value for their customers and partners. Meanwhile, there are now approximately 60 million Generation Z banking customers who control $45 billion in annual spending. With the oldest of them nearing age 24, these young adults literally have no recollection of a life prior to the internet, social media, and mobile tech. Gen Z expects highly transactional services, placing more value upon convenience over traditional branch-based, relationship-driven banking. In consideration of these things, and other things, I offer the following recommendations. 1, coordinate efforts with the U.S. Treasury and Federal Reserve Bank in establishing a sandbox environment and a decentralized national network of financial records. Without a definitive path of its own, relying on the financial services industry to provide tech solutions means the SBA is at risk for future disenfranchisement of the growing market of digital-first businesses owners who rely upon tech solutions for fast, efficient business operation. Similar to the early communication standards that became the internet and web, a collaborative approach to building a commercial lending and financial records network by the SBA, Treasury, tech companies, and banks could accelerate a more verdant, efficient, and trustworthy financial system. Through collaboration, the SBA is in a position to establish new standards for financial document and information networks, data interoperability, robotic process automation, and exchange. Firms that optimize customer data, robotic processes, and provide new solutions can offer timely and relevant support for the SBA's programs. With data-driven and digital-only models, challenger firms are in a better position to adapt to rapid change and unforeseen circumstances. Number 2, leverage and improve upon small business innovation research, SBIR programs to foster fintech and regtech innovation. The SBA has an opportunity to collaborate with technology companies to provide proof of concepts for the direct delivery of automated services. However, federal contracting, grant, or regulatory policies can be quite prescriptive when it comes to defining technology and solution requirements. Instead, Congress should establish goals for the outcomes of innovation programs and then strive to support businesses that offer effective, affordable technology solutions. While contracting vehicles already exist, they can be prohibitive for small companies to pursue due to the amount of resources required. As we've seen with recent SBIR innovations and instant procurements and streamlined processes within the Air Force, tapping into a wider national brain trust for innovation can be achieved through thoughtful improvements to the existing processes. As we deliberate national small business funding, banking, technology, and even monetary policies, Congress should invest in these opportunities, accelerate them where possible, and ensure the financial and regulatory standards and technology of the future continue to be led by American ingenuity and resolve. Thank you again for inviting me to testify, and I look forward to addressing each of your individual questions.
Thank you, Mr. Hiles.